Hi, and welcome to this week's episode of the Penny Lane Podcast featuring Impressive Emu, brought to you by Pennies Going in Raw.
The stock market is hotter than ever right now, and traders are taking advantage. But what does that mean for the people who still haven't started trading? The market can be a little intimidating at first, but you don't have to be alone in the learning experience. We at the Pennies Going in Raw podcast are here to help you. I'm Dan, and with my co-host Hugh Henney, we make the stock market a fun but informative experience for our listeners. We offer knowledge for all levels of traders, from beginners to those who do it full time. On PGIR, we discuss up-to-date news about the stock market and interview other traders who all started out just like us and made it big. You'll hear from Hugh and other multi-millionaire traders, founders and CEOs of companies, FinTwit superstars, and even professional athletes. Have you ever thought about investing your hard-earned cash but don't know where to start? Do you have money just sitting in your savings account collecting dust? We were all there once too. Listen to Pennies Going in Raw on the iHeartRadio app, on Apple Podcast, or wherever you get your podcasts.
Emu, hi. Welcome to the Penny Lane Podcast.
Hey, it's great to be here.
We're so happy to have you, and lucky for us, Justin's here today. Hello, Justin. So I have the pleasure of sitting in this space with two men who are still at work.
Nice.
Really burning the midnight oil, as they say.
That's right.
So, Emu, you just told us that you're in New York on Long Island.
That's right. Yeah, because this is where I've always I've lived here my whole life. I was born in Queens, spent a lot of time in the city growing up, and moved out to Long Island when I was a teenager, and been out here ever since.
Cool. Long Island is, we might have to cut this out. I believe I went through Long Island to get out to Quogue one time.
Yeah, that's
okay.
Yep, it's out east. Nice area.
I'm really stabbing the dark there.
It's Quogue is actually
Quogue. Well,
close enough.
Close enough. Yeah, it was a nice remote little area. Very nice.
Yeah, out east, close to the Hamptons, close to a lot of beautiful areas there, yeah.
We did then go on to the Hamptons, and I absolutely loved it. Like, maybe more than I've ever loved a place ever. And my husband's like, well, I mean, sorry, like, enjoy your time here, because I don't think it's a place we're going to visit regularly.
Yeah, it's pricey out there. We go to Montauk a lot, so we go through the Hamptons, Southampton, East Hampton, spend some time there. East Hampton's beautiful. You're an artist, you'd love it there. All the little shops and the artists that go out there and spend a lot of time out there. It's beautiful out there.
Yeah, the reason I went to Quogue, did I say it right?
Yep.
Is because I'm in a gallery there, the Quogue Gallery.
Makes sense. Yep.
Yeah, and I really wanted a gallery there to have an excuse to go, but I've only gone the one time.
Very nice.
Justin, have you been to the Hamptons? You seem like a Hamptons guy.
Yeah.
Justin?
I think we lost him. He's perfectly still.
That happened earlier. Justin?
I thought he was just listening to us.
It just very...
I'm like, wow, he's like a statue.
I was not clear on whether or not you've been there.
No, confirmed, not been. Would like to go.
Because I can really see you on a yacht in a white outfit, just...
Well, it sounds lovely.
Popping bottles.
On credit.
Yeah.
Full
tilt.
Yes.
Yes.
Yeah.
Paris Hilton will come out there and she'll pull up in her Ferrari while you're doing that at the same time.
Oh, you got us all figured out, Emu. That's right.
All right. Well, Emu, you have been mentioned many times on the podcast before in a mentor role, especially by that cute little Gup. So you are a teacher, right?
I am an MTA, yes. I took on the role as educator. Brad had asked me to become one after so many people had been so interested in what I was talking about. So I happily took on the role and have been helping people ever since. it's kind of, honestly, it's a kind of a surprise. I never expected that. I was just there trying to look. I was looking for a room to hang out with people that were like-minded, that were interested in trading like I was, with a cool vibe, nothing too derogatory, too crazy, too extreme. Um, and found that at MTA and just enjoyed myself there and quickly kind of got along with everybody. It worked out really well. It worked out really nicely. I love it.
Fantastic. So how long were you in MTA before you got the educator role?
Oh, I don't know. A couple of months maybe? I
Cool.
joined like right away. So a few months later.
Cool. Well, I think it's a good time for you to take us through how you started trading and your journey. Justin, I'm gonna mute because my dogs are freaking out, and I'm gonna let you take over here.
Got it.
All right.
Okay. Well, my training journey goes back way back. I'm a little older. I'm probably one of the oldest people in MTA. I think Mikey might have a little bit on me. That's about it. But I started trading when I was a kid. I fell into a little bit of money and started with options. But back then, it was over the phone with a broker, and I was doing micron options. And I'd call them up and I said, "Listen, I want to, go long. I want to go short. I want to buy this. I want to buy that strike price for this expiration." Pretty much blew like 2 months worth of salary in a couple of weeks, and
Nice.
got kind of turned off to it pretty quickly. I was like, "This is not right." Plus, my broker was getting $50 at every trade, and he was giving me zero advice and zero help. And I'm like, "This isn't the way it's supposed to be." At the time, I was working for a company called ADP Investor Communication Services. It's now called Broadridge. We used to mail out all the annual reports and prospectuses and do all the fulfillment for all the funds and whatnot. But it was basically just a giant mail house. It wasn't like anything special. But all these different financial materials were around, and I'd pick them up and start reading them as I'm doing stuff, just trying to get a feel for everything. I still have Marvel's first annual report and a bunch of other really cool annual reports that came out back over the years when they IPO'd. So from that, I kind of just stayed with it, but in a very typical retail kind of way where it's just, I bought some, held on to it for a few years, collected some dividends and let it grow. Never got into the day trading thing until I had my daughter. I went through my journey in business is pretty complex. I worked for a couple of companies. I started my own companies. There was a time where I took off I sold my company and took off for about 4 or 5 years and stayed home with my daughter when my wife was working. During that time, I took day trading much, much more seriously. I was like, you know what? I'm just going to figure this out. I'm smart enough. I'll make it work. When I went to college for engineering, electrical engineering, actually, and dropped out.
Wait,
I stopped.
we gotta pause there just to
Okay.
acknowledge we've got another engineer
Yep.
day trader. All you guys,
I
you're
didn't
all
finish.
engineers.
So I didn't finish because I was making good money working. So I didn't. And what I learned quickly about engineering school was that I didn't want to spend the rest of my life trying to figure out how many different ways I could wind a motor to make it the most efficient way. It just didn't sound appetizing to me, or any of those really specific details that you spend 30 years on. Somebody explained to me, listen, if you go into management and you get your engineering degree, you could at least manage a group of engineers. You could head projects. You could have, be much more interesting of a job. I started making money right away, and I was like, I'm just going to go make money. This is what I'm going to do. I'm already, doing my thing. So I never went back to school, and had quite a complex journey after that. But when I took that time off, I picked up my computer, had my little baby girl next to me. I said, let's figure this out. We're going to do this. Failed miserably for a while, for a long while, actually. I started trying to day trade, messed that up really bad. Figured out there's this thing called futures where you could leverage a lot more money, make a lot more money, and lose a lot more money. Picked it up a little bit, what I thought I knew about it, compared to what I know now, I didn't know anything. But I managed to just slowly bleed my money over 5 years rather than doing it in a day, or in a couple of weeks. And then I stopped again. I was like, I'm done. I blew up like 2 accounts in that time frame. I'm like, this is crazy. This doesn't make any sense to me. Maybe it's not for me. I had to ask myself that question a couple of times. Maybe this is just not for me. But I couldn't put it down. I love it. I really, really enjoyed it. I was really upset with myself for not being able to figure it out. So I always dabbled in it over the years, my daughter's 11 now, over the last few years, and stayed with it. and revisited what I thought I knew, learned more about other perspectives. Really still have yet to read a book on it or anything like that, but kind of just went into a chat room here or there, mostly on TOS. Followed Shadow Trader on TOS on Thinkorswim. Um, and there's another trader chat in there, just trying to see what these other guys are talking about. And as I was going through that, I incorporated some of it and revisited what I did know and didn't know, and started putting it all together. And it started to make more and more sense to me. And I think that whole journey it took as long as it did because I was so in a rush to just make a lot of money
Yeah.
instead of figuring out what actually the right way to trade. I was so in a rush to turn a few $1,000 into $100,000 that I didn't take the time to really understand what I was getting myself into. If when I started my business, I went through market research. How much money do I need? What's the rent going to cost? I had every penny figured out years in advance. Even what's my salary is going to be like? What's my taxes going to be like? Well, how's this all going to work? I went into trading like a complete idiot. Here's some money. Let me throw it at this. I'll YOLO it there, or I'll buy that there and see what happens. It was really gambling. I was really just buying lottery tickets, and the results showed that, right? But when I started to treat it like a business, when I started to treat it as something that mattered, it's not okay to lose any money, not a little bit of money, not immediate, no money is okay. But understanding that losing money is part of trading, it's part of the overall probability of day-to-day trades. You're going to lose a little, you're going to make a little. At the end of the day, at the end of the week, at the end of the month, you'll be up if you do it right. Once I kind of got to that point, I started being not just break even, but a little profitable. And I started moving up. And I stopped looking at everything that everybody else was looking at the way they looked at it. So when I first started, one of the first things you're taught to do is look at indicators. Okay, this is a MACD. This is how it works. This is when you buy it. This is when you sell it. And you look at it, it's like, wow, this really works. And then you trade it. And you're like, I don't know when to get in. When do I get out? How does this? I don't understand. It's not working every time I do it. Then I'd move on to other indicators. Then I'd move on to, ways of reading volume. And it really took a long time before I realized that it's actually a combination of all those things. I'm sorry, I'm rambling a little bit.
No. This is perfect. How many years elapsed between when you started trading and when you became consistently profitable?
For me, it was a long journey. I'll be honest with you. It wasn't a few weeks. It wasn't a few months. It wasn't even a few years. It was a while. Would
you say like 7 or 8 years?
I would say almost 7 years. Yeah.
So today I released an episode with Mitch Picks, and prior to that interview, the longest time it took someone to become profitable was singles and doubles. It took him 7 years. And then Mitch Picks said it took him 8 years.
Yeah.
And I kind of wonder if they're just being the most honest. I
don't have an opinion on that, but I can tell you from my experience, I don't know enough traders in my life. The traders I do know are all online. I don't talk to any traders day to day. I don't know anybody that works the market. I don't see how you could do it in a 6 months or a year or 2 years. Knowing everything I know now and the experience that I have, and I think of myself as a fairly smart person, and maybe average, maybe above average. I think of myself as a smart person. There's a lot to pick up. There really is a lot to pick up to do it right, to do it consistently. You can get your winning trades. Everybody can get a winning trade in. And everybody can be part of a market that just blows up and just you can't do any wrong. That's great. But a consistent market, after you go through a few bear markets, a few bull markets, a few sideways markets, and you see what actually happens and how it works, until you get through all of that, I don't see how you can be. It takes a decade to go through all of those,
Yeah.
So are you still trading options, or was that one-time thing and you were paying $50 a trade and losing all of them and said,
after I found futures, I didn't go back to options other than, whenever I owned a stock that I didn't want to lose money in a bear market, I'd sell calls against it or something like that to reduce my loss, to calm my losses down. Other than that, I really stayed away from options. Other than selling premium, I'm not really interested in them.
Yeah.
It doesn't do that much for me.
Now, do you think that any of that has to do with how you got started and how bad it went? Or do you – okay, so I didn't know if you kind of hated the fundamentals of them, or you hate the derivative function of it, or you just – or you just found a better option.
I found
no
something
pun
that
intended.
works for me more than anything else. And, I'm not in love with the whole time value. If you're buying options, it depreciates just from owning it, and that to me is a turnoff to it. You really have to be super right. It's already working against you the minute you buy it. I like selling options. I like selling calls. I like selling puts, but I'm not a big fan of buying them for a couple of reasons. One of the main reasons is, again, time value, right? The theta. The other reasons are that the market has three directions, not two. It can go up, it can go down, or it can go sideways. And if you're buying an option and it goes not necessarily against you, it doesn't go anywhere, you're still going to lose, right? But if it goes against you, you're going to lose. So they already got 66% probability you're going to lose. I'm not. That's not my thing. When you get into futures, you get tremendous leverage. You get to get in and get out whenever you want, and there's no time decay.
Go ahead, Brian.
So we just interviewed Chathan.
Jathan.
Gotta make sure I say his name right.
Yep.
And he and Ellis Stillinger spent the entire episode trying to explain futures to me. And by the end, I just was like, cool. And like, there was something about like, you need an address where they can show up to bring like an oil barrel to your house. And I was like, I can't.
You can't end up with a bunch of goats in your front yard.
I don't want the oil. I don't want the goats.
No lean hogs for you. All right.
No.
Soybeans
and wheat, corn. I'll explain it to you. I bet you'll get it in 2 minutes. I'll give it to you a super simple version of it.
All right. Well, you might give me too much credit.
Yes. Imagine you wanted to trade Amazon right now, today.
Okay.
It's $3,500 a share, $3,400 a share right now, right? So to trade one share, you need $3,500. Imagine you wanted to trade $350,000 worth of Amazon, but you only have $1,000. That's what futures allows you to do. It's exactly the same thing. So what you're doing is you're trading this SPX. The SPX, what you do is every point, and it's called in the ES futures is it's 1/10 actually. It's the minis of the SPX. SPX aren't tradable, but it's an index, right? So 1/10 of that value, what you do is you multiply the actual price of the ES futures, which is 4,700, I think right now, 4,720, wherever it was today, wherever it ended today, 4,700, I think, times the value of 1 point, which is $50, right? So it's hundreds of thousands of dollars. I'm doing my math. It's really late in the day, so I'm just going to do my math quick. $236,000. So what you need to trade futures, what you need to trade the ES is margin to buy one contract. In order to trade 2 contracts, you'd have $500,000 worth of leverage. 3 contracts, you have $750,000 worth of leverage. 4 contracts is $1 million worth of leverage. So it's similar to that. So, trading in itself is, the whole point of trading is trying to make money with the least amount of money you need to put into it. Risking the least amount of money to make the most amount of money, right? And that's what futures does for you. So let me walk you through futures very quickly. So one contract gets you the ability to enter an ES mini future, okay? A ES mini moves 1 tick at a time at $12.50 a tick. Meaning, like, when you buy a stock and you buy 1,000 shares, every penny it goes up, it goes out a certain amount of money. Okay, so every single tick that it goes up on ES, it's $12.50 per contract. On the average day, you move 10 points, 15, 20. Today we moved 50 in both directions. It was crazy, crazy day today. You move 10 points, that's 40 ticks. That's $500 per contract. In order to trade it, you need margin in the account. Okay, so full margin is $15,000 right now, about $15,000. But there's a lot of low margin brokers that'll let you trade that same contract that's already super leveraged for only $500 during the day between the hours of 9:30 and 4. So if you have $500 in your account, which is too low because if it goes 1 tick against you, to close it out, obviously. But let's say you have $1,000 in your account and you trade one ES and you trade it correctly, you get the 10 points the way in the right direction, you've just gotten 50% of your money. It's 100% of the money you traded because it was $500 to trade and you got $500 in return.
So you end the day with $1,500.
So you end the day with $1,500 if you're trading correctly on that day. The next day, if you have $1,500, you could trade 2 contracts. Take that same 10-point move, you make $1,000. Now you're up to $2,500.
Okay.
You could do this every day. You can compound up to 20 contracts plus. You can compound out much more above that. But you can get up to 20 contracts at that leverage of only $500 per contract. That's
And this,
go ahead.
the thing you're trading that's moving, what did you say it was called?
The SPX futures, ES. It's the E-mini futures for SPX. So the SPY is the ETF for it.
Okay. Got
S&P 500.
That I understand. Yes. So it's the SPY of futures.
Yeah, okay.
Okay. Yes. Perfect. Is that all is that the main thing that people trade in futures?
That's the most liquid futures there is. Absolutely. Okay. There's always somebody buying and selling at every single strike price. And there's probably about 1 million contracts a day being traded on that, which is actually a lot for futures. It doesn't sound like a lot.
That seems low.
It does seem slow, but when you look at actual futures and the way it moves, it's tremendous.
Okay.
Some futures only move with only 10,000 contracts a day, 30,000 contracts, 50,000. But the most liquid is definitely ES. And oil will probably be right up there too. Gold is right up there. The euro dollar futures are right up there. They trade very, very, very liquid. And you can get in and you can get out, and it trades 23 hours a day. So it moves. And you can trade, somebody like me who works full time can get up at 6 o'clock in the morning, trade between 6 and 9:30, 10, 6 to 8 even, get a couple of hours in, do what I need to do with the kids, get to work, turn the computer back on at work, pick up where I left off in between what I'm doing at work, and still be able to trade. And trading pre-market really gives you a good feel for what's going on with the overall market. When you're about to go into a small cap trade or something that's going on at 9:30, 10 o'clock, 11 o'clock, you kind of already have a feel what the overall market's doing. So it's extremely useful to know what's going on with the industry futures.
Big question, embarrassing question. I hate that I have to ask it.
Okay.
What does, Justin loves to say this, what does futures are green? What does that mean?
They're up. They're moving in the right direction. They're going up, and they're probably, so all boats rise and fall on the same tide.
Okay.
So if futures are up, it means the S&P stocks are going to be up, which means it's probably going to carry the rest of the stocks up with it, or anything that's related to it.
What's the market open? 340 days a year?
No, less than that, right?
Less than
weekends.
Right.
Yeah, it's 200 and something, 270. 50.
I'm not a mathematician.
Yeah.
Okay.
An engineer.
Sure. What percentage of the days in 2021 would you say that the market opened with futures being green, or that the futures were green?
If I had a guess, I would say 50%.
Okay. Cool.
Yeah.
So you like those odds now, Blaine?
I do think it's interesting. Also, question for Justin: why aren't you doing this? This set is like literally perfect for your personality. Also, is Booch doing this?
He is, and he's doing well. He's just paper trading right now, but he's actually up every day lately.
Yeah, I could see Booch really liking this. This is made for certain personality types, and Justin, you really fit in there.
You know, I have never looked into it for no particular reason. So I'd love to know what piqued your interest and how you got started, because this is a very narrow kind of, it's not a big world out there.
No, it's not.
Right? So.
It's growing though. It is growing. Much more interest is going into futures right now. You asked me why I went this way, what pulled me towards futures. Is that what the question was? I'm sorry.
Yeah.
So when I was trading stocks, the biggest issue for me was finding what people cared about at the moment. First, you have to find the right sector. Then you have to find the ones that people are actually trading, the ones with the relative volume. Then you have to figure out if they're at the right spot. Is this a good time to buy? Is it going to be next week? Do they have news coming up? Is there earnings? Are they about to drop an offering? It just became so inundating to try to figure out all these other things when I can just watch 1, 2, 3, 5 tickers every day with the same kind of movement, with the same kind of leverage, and the same kind of outcome. To me, it just didn't make sense. Plus, overall, if you look at the market, look at the S&P 500 for the past 100 years since it got started. I don't even know when the S&P 500 got started. It's been on a trajectory in one direction.
Yeah.
So generally speaking, although you may have had 50% down days, 50% up days. On the up days, it's been bigger than the down days. If you generally are buying, you generally are going to do well, right? So that's why we're always making fun of buy the dip in the futures room. It's like, oh, time to buy the fucking dip again because all we do is go up. It's never going to go down. But what happens is if you there are times you can get with that much leverage, it doesn't take a big move to blow up your account, right? So if it's going against you and you have that much leverage, but you're maxed out on your leverage, it's not going to take a lot for you to just be totally out of it. But if
Wait,
you time,
question.
yeah,
Can you can lose more than your account
yeah, you
size?
can absolutely.
Okay.
Yeah.
Okay.
That's happened to me. Yeah.
Okay.
Is this where you're out now, Blaine?
Uh-huh.
Okay.
It's not as likely anymore, right? Brokers are much more on top of it now. But there was a time where they actually used to pick up the phone and call me and say, "Hey, you're about to go below margin." Something crazy would happen, maybe in nat gas or something like that, or CL, and it would blow up or was crashing, and I was in the trade thinking that it's going to bounce any second, but all of a sudden it just drops like through the floor. That's happened, yeah. But that's part of having stops in place and part of making sure that right now brokers will close you out. Right now brokers will intervene. They'll see it happening. Their computers will all go off. All the bells and whistles will go off, and they'll stop you out. But there was a time when that wasn't the case, and it wasn't that long ago either.
So again, this is where my knowledge ends. So this is probably a dumb question, but aren't there not common stock, common share type vehicles that emulate futures contracts? Not like an ETF, but like if you use natural gas as an example, right? You're not buying the commodity natural gas. There's tickers out there that are those not emulating the future price of natural gas or oil? Is that, I mean, are there other mechanisms other than buying the actual contracts?
Yeah, well, I mean, other than like you just said, ETFs and other vehicles that mimic that move or follow that move, yes, but they're not leveraged like you are. You can't go and buy $250,000 worth of that stock like you can with futures.
Sure.
Futures is super leveraged.
Yeah.
So when you go in and you buy natural gas and it moves a dollar, oh my God, it moves a dollar, forget about it. That's like 10 grand in profits. But if it moves, a small amount, it's a tremendous amount of money. It really
Yeah.
is. It adds up very, very quickly.
So do you have to go through a vetting process with your broker to confirm that? So is it the same as options? Like, do you have to get certain levels of approval,
Correct.
not just margin, but you got to demonstrate some level of understanding of how this
Margins are
works?
relevant. It's not like they give you. It's not like they give you margin. Well, I shouldn't say it that way. It's not like a stock where you have 10 grand and they give you, 20 grand to spend.
Mm-hmm.
It's that you have 15 grand in your account and now you're allowed to trade that future. And if you go below that 15 grand margin or 3 grand margin, whatever it is for that instrument that you need, once you go below that amount of money in your account and you're still in the trade, they're going to ask you to close out the trade. Or they'll put a stop limit in there so that you don't go below zero and tell you flat out, don't take that off. If you do, we're going to close it out and we'll close out your account. But there is a vetting process where they want to make sure you have some experience trading stocks, some experience trading options, and the longer the better, you know. And then after a couple of years of that, they'll allow you to trade futures. And the reason for that is because of how leveraged it is and how quickly you can move against you and blow up your account. You buy a stock and you're wrong about it and you move it to your IRA or whatever you want to do with it, you hold on to it, it's no big deal unless the company goes to zero, which happens but doesn't happen that often. It's different than buying futures. If you're on the wrong direction of futures, it just keeps moving against you. If you shorted the S&P 500 a couple of days ago, even you'd be screwed right now. You'd be $1 million in the hole. You can't. It takes billions of dollars to move that index.
Uh-huh.
So and when if you're going to be if you're going to be participating in a move like that, you need to be careful about your entries and your exits much more than a regular common stock. If I didn't confuse you, hopefully.
No, actually I think I have a pretty good handle on that, I think.
So they talked about deliveries of stuff because what happens is if you go long oil and there's expirations on these contracts, they overlap. And what we do is we switch to the contract that has the greatest volume. So we're trading it just like you would a stock buying. Well, this is the other reason, Justin, that I switched to futures. When you go in for stocks and commons, you typically are looking for the long trade. That makes the most sense, right? So you can buy it and sell it for a profit. However, when you're looking for a short trade, it's much more difficult. You need to borrow it. There's fees associated with it. Sometimes they're hard to borrow. There's none to borrow. They're easy to borrow. With futures, you hit the buy button and you go long. You hit the sell button, you go short. You hit the sell button again, you're short. Some more. You hit the buy button, you're long again. It doesn't make a difference. You go either direction at will, anytime. And it gives you the ability to trade both directions and make a tremendous amount of money. So while stocks are falling off a cliff and everybody's crying about their IRA, you're short the S&P and you're like, I'm good. I don't care. They can go to zero right now. I'll be a millionaire. It's that kind of thing. So it gives you the ability. It also gives you the ability to get out of this little circle, this little tiny world of finance where there's so much more you can go into, right? If you're just doing stocks and you're just doing it for a few hours a day, you're really limiting your ability to make money in the market. And if you have futures as someplace else to go where you can trade commodities and you can trade indices, and you can trade currencies, that opens up a whole new world. Just like options opens up another vehicle for you, and bonds might work up another vehicle for you. There's other areas to put money when one isn't working, and sometimes stocks don't work. That might happen sooner than later when bonds start coming back and start mattering again, and interest rates start going up. It may not be what it is right now. It may be flatter as a market. You may want to be able to do some of these other things to be able to continue making money as a trader.
So do you exclusively trade futures right now?
90% of the time, yeah.
Cool.
Yeah.
And I also heard, just to really transition, I heard that you're my guy to ask about fibs.
Maybe.
Okay. Let's say I know nothing about fibs.
Okay.
What can you tell me?
What can I tell you?
Hold on, back up. Do you know what you're abbreviating, Blaine? Let's start there.
Fibonacci levels?
Well, yeah.
Okay.
That's a charting tool. I think you now know more than you think you did. So
Well, Gup helped me some, but said don't ask him, ask you.
Well, so fibs is something I was exposed to a long time ago when I was first trading futures. When I was with my daughter at that time, somebody started talking about fibs in one of those Thinkorswim chat rooms, and the way they drew them is they drew them on every flag on the daily. They pulled them on every flag, and then they said whenever you see a lot of them lining up in the same area, that's a level that's really important and matters, and you should look at that. So that's great and all. I just didn't know how that mattered to me, how to enter, how to exit. There was still a whole system I didn't really get. So that was just always in the back of my head. And I've always tried to use them in my training, but never really got it refined, right? So what's a fib? A fib is it's a way to measure the market, a way to measure price action in the market, right? And I exclusively use the Fibonacci retracement tool. I don't use the extension tool. I don't use any time series or the channels or any of those. I use strictly the retracement tool. And the interesting thing about Fibonacci's in the real world, outside of trading, is how it makes things look appealing, how it makes things work. Fibonacci numbers are just it's a sequence of numbers, right? You start with 1, and then you have number 2, because it's 1 plus 1 is 2. The next number is 3, because 2 plus 1 is 3. The next number is 5, because it's 3 plus 2 is 5. The next number is 8, because it's 5 plus 3 is 8. And it keeps going in that sequence. You find that sequence in nature almost everywhere. You find the ratio, that specific ratio, if you divide one number by the other, by 8 by 5, and so on, that golden ratio, you find that everywhere also. You find it in things that look attractive.
Totally. I've worked as a professional photographer for 15 years.
Okay, then you know how that works and how that makes things look attractive and just work better in nature. You can see it in sunflowers. You can see it on the proportions of your face. You can see it in some of the Greek buildings that they built back in the day. They made sure the proportions were just right so that it was appealing to the eye. I really believe charts that are not appealing to the eye are hard to trade.
Ooh, I like this.
Yeah.
I like this a lot.
It actually, I really believe that. So there's a couple of things that happen, right? When a stock first IPOs and no one knows where it's going, it's all based on fundamentals. That's not going to go up. That's going to go down. Bulls and bears, they're fighting over it. It finds a way, finds a direction. And then there's a pullback. And then it goes again in that same direction. So the only way to kind of get a gauge of how far it can go is by doing Fibonacci's, right? So those levels that are first created during the IPO, those levels, I think, are what stick to it going forward. That's what creates the levels that will stick with that stock for a very, very long time. When they go back to those levels, they're going to react again, all the way back as far as the IPO, until it escapes and runs away to new, very, very high levels, but then they get created up there anyway, right? But if you look at a chart and then you say to yourself, this needs to kind of come down, but how far down should it go? Halfway, a little bit more than halfway, a little less than halfway. When you put the Fibonacci's up there, it kind of gives you all these levels and it kind of makes it really clear to see that's a chart that makes sense to me. This is a good place to enter. Visually. I don't mean mathematically, fundamentally. I just mean visually. And as you start to use them, and you kind of get a feel for where they belong and how you can draw. And I'm a very visual person. I spent my entire childhood drawing. And that's what I took to engineering, and I kind of put the two together. And then I went into marketing. I don't even know what I'm doing anymore. I'm all over the place. But I took all of my previous skills and kind of applied it to the market and looking at charts. And they all kind of fell together. It made a lot of sense to me. And then when I started to use the fibs in a special way, which you won't read about or see anywhere, I use them in a very specific way. It all became super clear, really, really clear. It made so much sense to me. Everything kind of late. And if you watch the video that I had put out, every time I draw my fib, you can see very quickly how the levels become super strong, support and resistance levels everywhere, every single time I draw them. And I don't see that happening until I actually draw the fib. Price always reacts at those levels very, very dramatically. So it's really interesting. When I found that happening and I found how well it was happening, I went back and tried to make a trading system out of it so that I could figure out when should I enter, when do I exit, what can I expect from this move, how often does this level get hit compared to the next level, and I kind of did my own little stats and figured it out, and then I thought I had it down pat until I was asked to explain it in MTA. Then it was like, oh shit, I'm not sure. Should I do it on the close of the candle or because it was kind of in gray for me, but I had a good feel for it, but I was never asked to explain it to anybody. When I did that and when I was forced to explain it and then reviewed it, and then I was like, well, I really need to answer that question right. I can't just throw something out there. I need to give them a good answer. I actually refined it to the point where it's like now it's golden. It really, really works really, really well. And actually MTA helped me do that.
That's awesome.
I'm appreciative about. Yeah, absolutely.
I love that. I like this whole concept a lot. I'm going to have to watch. You just did a YouTube video, right?
Mm-hmm.
I'm going to have to do that because I use that all the time when people are like, well, why'd you pick this stock? And all I can say is like, it was really pretty.
Right. The stock made sense to you. It connected to you. This chart made sense to you, right?
Yeah.
If you learn how to draw fibs the way I draw them, you'll be really interested. You'll do really well too.
I'm already like really interested.
Awesome.
And I've talked about that on here too because people get upset with me about this, but I do like a lot of my trading is just kind of like a feeling, it's like an intuitive feeling, and a lot of that comes from me just thinking like this chart is like pretty and balanced, and it's like going up, consolidating, like it's stair stepping in a way that my mind likes and all of that. I'm super interested. It seems like maybe the answer to all my
could be
like, Blaine, why are you trading that? And I'm like, the chart's pretty.
Listen, trading that's the last part about trading I didn't get either until later on. Is we all have our own personalities, and options is a certain way to trade. Futures is a certain way to trade. Common is a different way to trade. And some people just want to be in a lot of trades at the same time. Some people just want to focus on one thing and just kind of let it play out and get out and move on to the next thing. Once you figure out your personality type and you match it to a style of trading, which needs to be your own, I think that's when you do well. And I think I finally did that over the last few years. And I
Yeah.
refined it over the last year, I would say.
Yeah. Um, I do talk about this a lot, but I interviewed Shark
Mm-hmm.
one time. He's an options trader. And it was Justin wasn't here, and it was just about options. So I was like, well, I have to talk to him about something that's not purely options, because I just don't think I could hang in that conversation. And he is a musician,
Okay.
and I'm a painter, which you brought up. Thank you for knowing that. And we talked a lot about the correlation between art and trading and the ability to, like, I put it as looking at a blank canvas and being able to like pick your tools and choose your own adventure, and have like, you make one mark, which then speaks to the next mark, which speaks to the next mark, and like finding your way into that painting, through that painting, and out of that painting. Only I can do.
Right.
And I find trading to be so similar. Like, there's a billion ways to trade the market every day.
Right.
And until you get comfortable enough with your own style to be like, this is what I do and
Yep.
this is how I trade it, I think that's the light bulb kind of moment, is that no one can teach you
Your own style.
your own style. Yeah, exactly.
Agreed. I really agree with that. There's so many different ways to interpret what you're seeing on the screen. You know, when you're trading and it feels like it's you against the computer in front of you, or you against the market. It's really, what is the market? It's a bunch of other participants just like us behind another screen that is seeing the same thing we're seeing, but interpreting it slightly differently. The majority of them are going to pick one direction, and that's the direction the market's going to go, right? So we try to, if you can interpret it like the masses, you'll do better, if that makes any sense.
Yeah.
Brian, do you think that you'll try this at all? Like, okay, not charting using fib levels, because you can do that whether you're trading futures or anything. Right? So that's different. But do you think that you'll look into trading futures, or do you feel like you need to have like blinders on as you're still kind of working through what you want to do long term as a strategy?
I'm not throwing you any shade, just as a matter of fact,
That's what this is for. This is cool.
You have not been on every episode recently, but
Yes.
sort of every episode for the last 10 episodes, I've just honed in like more and more and more on exactly what I want to do. And I'm really getting kind of back to like, I really like a nice mid cap EMA writing stock that doesn't have a billion people in it, and the volume isn't like the top volume of the day. I like to just get in a stock, hold it for 3 or 4 hours, and then have like very specific rules on when I cut that stock. But it's taken all of these conversations for me to go back to, that was what I liked when I first started trading. And then I went on all of these different, like, I'm going to do this, I'm going to do this, I'm going to do this. And then sort of coming back home to that thing that I really like, and having all of this knowledge that I've gained from all the different things, it makes me feel like such a stronger trader because I've chosen these things or whatever. But I do, just hearing you talk about the fibs and the levels and having it click so much in my mind of like, oh, that's what I'm already seeing. I think I would be very interested in using it on the things that I like to trade. Long answer.
No, I mean, it was. I think so. Let me pull. So let's just use the Discord that everyone's in, MTA, as like a population size, for everybody. How many people do you think are actively trading futures, or maybe not actively, but at least dabbling in it?
In
Like
MTA?
Yeah.
I mean, it's growing. It was just me and Chathan, right? At first, and Enar and Donnie. It was like 4, maybe 5 of us. I might be missing somebody. And then we've had some stragglers come in, and some of them are having a tough time with it. I know Minotaur's in there. He's having a little bit of a tough time, and I'm trying to think names. I know I'm forgetting a few names, but a couple of guys have dropped out or are not as
Rogue.
active. Who?
Rogue's doing it, right?
Rogue's doing it, sure.
Yeah.
Now we're up to right. So what happened is I think Broda had come in and said, "Whoa, what am I missing out on here?" And I've been trying to get him in there for a long time because he's really good at trading. I'm like, "You're really good at trading. How are you not leveraging that to the max right now?" At some point, he joined us and was messing around. Was kind of lurking first and then jumped in. Before you knew it, he was using fibs and he was looking at the futures before he started trading it during his day, and started commenting on it. Then Maxi came in, and then Rogue is in there now, and Sellers and LOL, and so it's growing. Wheels is in there. I can't name everybody.
But if you're naming people by name, though, like that's a pretty concentrated population, right?
It's growing, and they're all active, and it's actually a really fun little group right now. They have a blast in that room.
So, in general, do you think there's a lot of people that do not trade futures because they don't understand them, or is there something more to it?
I think they don't understand them, one, and two, probably they haven't been trading long enough to be approved for a futures account.
Got it. That could be a pretty big piece of red tape there, right?
Well, you can probably exaggerate your experience if you wanted
to. Yeah, to your own detriment, right?
Well, if you don't know what you're doing, you shouldn't be, right?
Yeah. No, I got it. So I guess I'm going to ask an abstract question.
Okay.
But do you think in a way, yes, I understand volume price analysis, right? And the importance of it. But do you think that there's some benefit to the fact that the number of people trading futures is a little bit smaller?
Do I think there's a benefit to the room or to futures in general? What do you mean?
Yeah. Just no. In general, not the room. Sorry, just in general that that the group of people that are generally frequenting futures trades is a smaller number of people.
Yes, I don't think that. I think that's a bad thing. That's not a good thing.
You think it's detrimental?
Absolutely.
Okay.
I do think it's detrimental because there's a lot of big players with deep pockets that play this game. I mean,
you're looking at two of them.
I didn't realize. I'm so sorry.
Oh, Blaine, thanks for keeping a straight face. We really appreciate that.
So, I mean, there used to be times when, some hedge funds wanted the futures to be somewhere so that their stock could do something else, or their portfolio can get green again. I mean, they would try to move this thing around. And it's messing around. It's problematic because of what it can do to the overall market, what it could do to the day trader, to the little guys. It sets the tone for the day. It sets the tone for the trades that are likely to happen throughout the day. The more people that are doing it, the more people that understand it, the more people that are involved in futures. Number one, they'll be more liquid and they'll move more consistently. Not that they don't move consistently now, but I think more people can take advantage of the fact, and more people can take advantage of the plus sides of it, and it'll be less likely to be taken advantage of by those bigger players with very, very deep pockets. And like I said, it takes billions to move this thing around now. It doesn't take millions. So
yeah,
and people still move it around.
You guys ready for some questions?
Sure.
Yep.
Okie doke. When did you begin to have the confidence that you have? You're one of the few traders I've seen not really get shaken at all by a position.
Oh, yeah. I'm finally over that, thank God. It's only been the last few years, like I said, that I've been confident enough. Because once you get to a point where you've tried everything and you're like, you know what, nothing works. I need to just do it my way and see this my way. When I did that, and then every time I went to take the trade, I actually followed my plan and I saw that it played out. Even if I left too early or entered incorrectly because I was getting anxious or went through all those emotions, but I still saw my setup work properly. After enough times of seeing that, at some point you're just like, my setup has always worked. So I'm just going to I'm going to do it this time. And
Yeah.
you hold it through and it succeeds. And you're like, wow, I actually did it. And then you do it again. And then you do it again. And at some point, it's just like you have real confidence in your move and in your trade and your setup. Then at that point, you get to move forward. You get to make money.
I like that. All right. Donnie wants to know about your strategy for the $500 futures challenge where you destroyed Broda.
My strategy was keep it small at first and build up the account. At the end, I've leveraged everything. At the end, I wanted to make sure I pulled ahead, so I went all in.
So this is a real thing, you versus Broda.
Yeah, it was a real thing. Well, no, it was all of us. It was all of us in the training room, in the futures room, right? We all kind of threw in a few dollars. I started at 500. Some people started with less. Some people blew up their accounts right away and put more money in. And me and Broda kept it going. Broda got up to about 10K or so, right over it, I think. Towards the very end, the very last day, he was catching up to me, and I was like, no way. So I took all 20 contracts and I started dumping them into trades. I'm like, I'm getting way ahead, and I ended up pulling out another $5,000 that last day, which is 50%. That's what futures can do for you. And they weren't even that great at trades; they were really small trades. But when you're leveraging 20 contracts, you know how I said one contract is $12.50? Well, 10 contracts is $125 per tick. 20 contracts is $250 per tick. So per tick is 4 ticks and a point, and the average move in the futures is 10 points. That's 40 ticks times $250. It's 10 grand. It adds up really fast. And if you can do that consistently every day with futures. So I saw those last few trades and I was like, I'm taking them, and I posted them every time I took. I'm like, Broda, everybody, this is where I'm at. I just took this trade. Here's a screenshot of what I did. Here's my ladder. This is what it looks like. And I ended up pulling ahead and winning. So the strategy I used was start small. I didn't go all in at the beginning. I didn't do full leverage. I only did about 10th leverage or so. And then as I built up the account to about $1,000, I went up a little heavier. And as I was winning, whenever I was winning, I betted heavier. I put more money on the line. And the days that I was kind of off, I was really small. I stayed small. I never escalated, never increased my my trade. So at the very end is when I really went in heavy, and I was just really out of just out of the need to win more than anything.
Sure. Beating Broda in a trading contest. Congratulations.
Thank you.
All right. How do you balance a full-time job while you're trading?
Well,
I will couple that with what's your market prep routine before open. I think those are sort of...
Okay. So it is very similar, right? So I wake up in the morning and the first thing I'm going to do when I turn on the computer is try to figure out what the market's doing, where it's been overnight, and where I think it might be going during the day based on its movement. And I spend my morning doing that from about 6 to 8. I spend a good 2 hours, and I trade during that time most days. So although I work full time, I'm trading those 2 hours of the day, which tend to be fairly busy. Europe's open, London's open, and they're pretty active. They tend to move the market pretty well. So I do all of that. As market prep, what I do is I check all the indices. I trade ES mostly. So I look at NASDAQ, I look at the Russell, I look at the Dow, and I look at the S&P, and I try to figure out where the divergences are, what's happening with these different trades, what kind of news might be coming out today, what might affect the market, what are we expecting? Are we at all-time highs? Is it time for a pullback? Are we running away too quickly? Is it too hot in one direction? So I'm looking at all kinds of different things that matter to the market. And I post a lot of those in the futures. And if you look at futures education, you'll find a number of those things also. I spend a good 2 hours trading and reviewing and trying to understand what's ahead of me for the day. Then when I get to the office, I kind of already know all that. And I trade in between things. So I'm not always able to catch the move. It's just sometimes I'm just not available for it. Unfortunately, the market doesn't want to work on my schedule. I got to work on the market schedule, right? So when I am available, I'm sitting in front of the computer and I see something set up. I grab it. I take advantage of it. I'll call it out sometimes. If I see something longer term, I'll definitely point it out. We're generally moving up. If you see a pullback, that's buyable. If we're generally moving down, if you see a pop, that's sellable. And I'll look for that throughout the day. And if once something shows up, I'll jump on it and take the trade. It's a tough balance. It's a lot, but I'm lucky enough to be in a position where I'm not low level in my company, right? So I have some say. Have my office. I get to close it once in a while. I get to schedule certain things, so I can pick a few times during the day where I can be quiet. That's not available for everybody unless you're working from home, maybe, or you're up a level also.
Makes sense. Um, being an emu, do you ever get jealous of other birds that can fly?
No, me and the ostriches and the penguins, we get together and we talk crap.
Perfect. Other than futures, what else do you enjoy trading?
Everything. I mean, I like trading everything if the opportunity is there and I see it. I mean, I'll trade options. I'll trade small caps. I'll trade over the counters. I took a little over the counter trade the other day. It was like a 5 cent trade. Jumped up to 7 cents and sold it. Made some decent money on it. I'll trade anything that looks like it has a good setup and has some range to it.
How does your style of trading transition when you trade equities versus futures? What tends to work better for you in one market but not as well in the other?
I use a lot of the same trading techniques across everything I trade. Not a lot changes, except for stocks that maybe move in a small range up and down and tend to stay in that range. They'll pop at 2 or 3 times a year, some of the smaller commons, and then they'll just go back to a range and stay flat again. I stay away from those typically. My style doesn't work with that. It works well with fluid, moving up and down.
Oh, these are from Rhoda. How does he work out the EOP?
How did I work that out?
Yeah.
Okay, so there's a something called a opening range trade, where you watch what happens with the whatever you're trading for the first 30 minutes of the day, and it'll just kind of create a range. This is the high, this is the low within that first 30 minutes of the day. And the way you're supposed to trade that is when it breaks out of that range, you go long. If it goes up, if it breaks down, you go short, and then you grab that move, whatever that move might be. And I tried that for a while and it just wasn't working for me. And I couldn't figure out why it wasn't working for me. There should be a better way to gauge direction. So I started to have a better understanding of how to find trends and their general direction, higher highs, higher lows, lower highs, lower lows, as an uptrend and a downtrend. So in the morning, what I would look for is exactly that. I would look for 9:30 open. I would make believe nothing existed before 9:30. At 9:30 open, I'd watch the price action. And what I'd notice is a lot of times it would pop up, retrace about halfway, and then continue up. And then a lot of times that 30-minute opening range would catch the opening and part of that pop up, right? Sometimes it would go outside it and then come back in because it would happen over more than 30 minutes. Other days it would drop really quick, retrace about 50%, and then fall. And as I noticed that and watched that, what I ended up doing is pulling fibs on them and noticing if you pull a fib on it, that you can actually, it'll hit those targets. It'll hit the targets that the fibs pull. And sometimes it would hit much further, second, third, and fourth target. And I didn't know why or how far or what to gauge at the time as much as I do now, but I could definitely count on at least the first target getting hit whenever I saw that setup. So I tried it over many months. And then after I noticed that happening, it wasn't just pulling fibs on the daily. You could actually pull fibs on the 5-minute. You could actually pull fibs on the 15-minute, on the hourly. And I started using all those different levels. That turned into my opening play. It was no longer the opening range. It was, am I getting kind of an N, where the second half was a little higher? I can expect to move up. Or am I getting kind of a U and the second half a little lower, and I'm probably going to get a move down? And then when I started drawing fibs on that, it all kind of started making sense to me. And after, like I said, I started explaining it to people at MTA. And that's when I refined it in terms of when to enter, at what point, at the 5-minute close, at the close of the candle and continuation, and that 50% being resistance. If you watch the video, you'll know what I mean.
Yeah, I can't wait to watch the video. All right, this is going to be the last question because we are sort of running out of time, but I love this question. What were the key lessons you would give a small futures account trader?
Key lessons are start small. First of all, start with paper trading for sure on futures. No matter what anybody tells you about having skin in the game, forget it. Start with paper. Refine a system that's profitable without emotions. Forget it, because there are no emotions when you're paper trading. Just figure out what's happening and which way it's going and why. Once you start to get a feel for futures and direction and price action and how levels work and how far it could actually go, what it could do to your account in terms of growing it or quickly shrinking it, and you have a profitable system that you can use fairly consistently, then I would put some money into account and trade real small. Micros is what I would start with. Is what they're called. They're 1/10 of the normal futures. Start real small, put a little money into the game, and then if you can be profitable with micros, it's not a hard step to go up to full contracts, to full ES contracts or NQ contracts. It's not a difficult move. But if you're not consistently profitable in micros, don't ever step up. Don't increase the number of contracts. Don't increase your leverage. Forget it. It's not worth it. That one trade will wipe that one wrong trade that you think is going to bounce. When it doesn't, it just keeps going against you and going against you. But the RSI is oversold. It'll stay oversold. It'll stay oversold for hours sometimes and just fall off the planet. It's done that. So you don't want to be in that trade, and you need to understand that it's not like commons. If you're wrong, get out right away. And if you're right, add to it, and you'll do really well. That's the best advice I could give somebody. And use the UMO opening play.
That reminds me of options. If you're like, that's what I do. If I'm wrong, I cut. And if I'm right, I'll add to it. Who knows if that's right or not? What?
It could work.
I said, you said if you're wrong, you cut. And you said if you're right. And I said you sell too early.
No, I've been adding more to it. Adding more to it, but I love to sell too early. If there's a way to cautiously day trade, Justin, I'm all in. Justin, how likely are you to get approved for futures tomorrow, not paper trade, and go all in?
After the last question that Emu just answered, not doing that.
Okay, all right. We're learning.
I am going to check out Emu's opening play, though.
You should.
I'll be looking.
You do well.
Cool.
Awesome.
Well, Emu, you are delightful. I'm also going to ask you later, probably for a personal fib, lesson.
Sure.
And then I'm going to become like the fib queen. I can see it all in my mind's eye. So
that sounds great.
All right. Well, have an awesome night, and we appreciate your time, and we'd love to have you back anytime.
You too. Yeah, I appreciate it. Yeah, we'll definitely do it again sometime. Absolutely.
Can't wait.
Have a great night.
Thanks,
All
Emu.
right. Thank you to our producer Joel Edwards and Chesley Lowe for the banjo music. Please like, subscribe, and share this on social media. We appreciate you guys.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.